The global silver market operates as a continuously evolving and deeply interconnected system.
One of the most volatile
Price
major
movements are
commodities.
influenced not just by one country or one trading session, but by a chain of financial activity that travels across time zones. One of the most powerful drivers of overnight price movement comes from Asian markets, often the first to react to new economic data and global sentiment. Traders in Europe or North America frequently wake up to significant changes in silver prices, which appear sudden but are results of active trading in Shanghai, Tokyo, and Hong Kong. Large institutional investors, commodity exchanges, and industrial participants continuously influence supply and demand dynamics in these hubs. This process begins with global trading hours. When U.S. markets close, the financial world transitions into the Asian session, not pausing. While Western traders are offline, a different group of market participants actively makes decisions based on fresh information.
And when central banks adopt
This
policies
time
that
zone
increase liquidity in
rotation
the
is why
financial
silver
system,
prices
such
move
as lowering
overnight.
interest rates or
Any
engaging in
major
quantitative
development
easing,
after the U.S.
it can reduce
close
the
is
attractiveness of
first
holding cash
processed
and
by
push
Asian
investors
markets.
toward alternatives.
This creates what
And this
feels like a
dynamic can be
sudden
further
jump or
amplified
drop
if
in
there is a
price,
concurrent decline in the
but
strength
it's a
of the US
continuous
dollar,
global reaction,
meaning that a weaker dollar
often
makes silver
outside the
cheaper for
visibility of
international
certain
buyers,
traders.
thereby
This
increasing
dynamic is
demand and pushing
crucial when
prices higher.
considering
And in addition
Asia's
to these
role in the physical
macroeconomic
silver
drivers,
market.
geopolitical risk
Countries
plays
like China
a
and
significant
India
role
are
in
among the
shaping silver
largest
prices,
consumers
as
globally,
periods of global
not just for
instability tend
investment,
to
but
increase
for
demand
industrial
for
use.
safe haven assets.
Silver is
And while
critical
gold
in
is traditionally the
electronics,
primary
solar
beneficiary
panels,
of such
medical
flows,
equipment,
silver
and
often
manufacturing.
follows and can sometimes
Increased
outperform.
demand in these
Due
regions
to its
due to
smaller market
economic
size and
growth
higher
or
volatility,
incentives can
which
lead to
means that even a
significant
modest
buying
increase in
pressure,
demand can
pushing
lead to
prices higher
disproportionately large
during
price
Asian trading
movements.
hours.
And this is particularly
Conversely,
relevant in a world
signs of
where
economic
geopolitical
slowdown
tensions
or
can
reduced
escalate
industrial
quickly and
activity may
unpredictably,
weaken
creating
demand,
sudden spikes
causing
in
prices to
and
fall
beyond these
before
fundamental
Western
factors.
markets reopen.
The structure of the silver market
Beyond
itself
physical
can contribute to
demand,
rapid price
major
movements,
Asian
especially
exchanges,
through the use of
especially the
leverage in
Shanghai
futures
Futures
and
Exchange,
options.
play a
Trading.
central role in price
And while this
discovery for
leverage can
silver
magnify
futures.
gains, it
High
also
trading
amplifies the
volumes
impact
and
of buying
active
and selling pressure,
participation from
meaning that when a
institutional
large
and
number of
retail
leveraged
investors
traders
drive price
enter the market in the same direction,
quickly
it
reflected
can
in
create a
global
powerful
benchmarks.
momentum effect that pushes
These
prices
exchanges
sharply higher.
operate during the
And
Asian
this
session,
effect is often
often
reinforced
setting
by
the tone
algorithmic
for the
trading
rest of the
systems that are
trading day
designed to detect
worldwide,
and exploit
acting as
trends,
an early
executing
indicator
trades
of
at high
market
speed and
sentiment.
increasing the velocity
Another
of price
critical
movements.
factor for
And
overnight
another
silver
important
price
consideration
movements
is
is
the balance
currency fluctuation,
between supply and
especially
demand
between
in
the
the physical
US dollar
market,
and
as
Asian
silver is a
currencies
critical
like
component in
the
a wide
Chinese
range of
yuan and
industrial
Japanese
applications,
yen. Since
including
silver is
electronics,
typically priced
solar
in
energy,
dollars,
and medical devices.
any change in
And as
exchange
global
rates
demand for these
alters its
technologies
relative
continues to
cost for
grow,
buyers in different
particularly
regions.
in rapidly
If
developing
the dollar
economies
weakens
such as
during
China
the
and
Asian
India,
session,
it can place upward
silver
pressure on
becomes
prices,
cheaper,
especially
potentially increasing
if supply is
demand
constrained due
and
to mining
driving prices
disruptions,
up.
declining ore grades,
A stronger
or
dollar
regulatory
has the
challenges.
opposite effect.
And because the process of
These
increasing
currency
silver
movements
production is
often
both
occur in
time-consuming
response to
and
economic
capital-intensive,
data, central bank
supply cannot
policies,
easily
or
adjust to
investor
sudden
sentiment,
increases in
many
demand,
announced
which can
during
result
Asian
in
hours,
sharp price spikes
amplifying
when
their
the market
impact.
becomes imbalanced.
In addition to
And
these
at the same
factors,
time, investor
geopolitical
sentiment and market
developments in
psychology
Asia
play
play
a
a major
crucial role
role
in
as the
determining
region
how
hosts
quickly
key
and how
economies
far
and
prices
political
move,
hotspots.
as financial markets
Events
are
like
driven
trade
not only by
negotiations
objective
or
data, but also
regulatory
by
changes by the
perceptions,
Chinese
narratives,
government
and
can
emotions,
directly impact
meaning
silver
that
demand,
if a strong bullish
given its
narrative
dominant
begins
role
to
in the
take
global
hold,
industry.
such as the belief that silver is
Developments in other
undervalued
Asian
or poised for a
economies
breakout, it
also
can attract
influence
a wave of
investor
speculative
confidence and
buying
risk
that pushes
appetite,
prices higher,
leading to
and this
shifts
effect
in
can be
capital
particularly
flows that affect
pronounced
commodity
in the modern
prices.
era,
This
where
brings us to
information spreads
institutional
rapidly through
trading and
social media
algorithmic
and
systems,
online trading platforms,
increasingly dominant
allowing
in modern
retail
financial
investors to
markets.
coordinate their actions
Large
and amplify
firms use
trends in
advanced
ways that were
algorithms
not
to
possible
monitor
in the
global
past.
conditions,
And however,
reacting
while
to
all of these
news,
factors
price
suggest that a
patterns, and
12%
technical
jump in silver
indicators within
prices is within the
milliseconds.
realm of possibility,
These
it
systems
is equally
operate
important to consider the
continuously,
risks associated
amplifying
with such a
price
move,
movements
because
initiated
markets are
during the
inherently
Asian
unpredictable
session,
and often subject
turning
to sudden
modest shifts
reversals,
into significant
meaning that
trends.
sharp
By the
increases
time
can be
other
followed
regions
by
join the
equally sharp
market,
declines.
liquidity
And one
is
of
also key.
the primary
Market
risk is the
participation
potential for false
influences price
breakouts,
movement.
where prices
While
appear to
Asian
be moving
markets are
strongly in
active,
one direction,
global
but then
liquidity
quickly
may be
reverse due
lower
to
compared to
profit-taking,
when multiple
changes
regions
in
are open.
sentiment or
Large
external
orders
shocks,
can have a greater
trapping traders
impact.
in losing
This leads
positions.
to sharper, more
And this risk
pronounced
is
movements,
compounded by the
especially
use
in a
of
market
leverage,
like silver,
which can
which
amplify
doesn't have the
losses
same
and lead to
liquidity as
margin
major
calls or forced
currency pairs.
liquidations,
Beyond
further
technical
accelerating downward
factors,
movements.
market
And another
psychology
important risk
plays
is
a
the
crucial
influence of
role.
external factors
Traders
such
in
as
different
central bank
regions
decisions,
interpret
economic data
information
releases,
differently based
or
on
geopolitical
cultural and strategic
developments,
perspectives.
which can quickly alter
This
market
diversity
expectations
creates
and
momentum
trigger
during the
reversals.
Asian session,
For example,
carried
if inflation
forward or
data comes in
challenged
lower
as
than
markets
expected
open in
or
Europe
central
and North
banks signal a
America.
more
A
aggressive tightening
continuous
stance,
feedback
it could
loop.
strengthen the US
Asian
dollar
markets
and
often serve as a
reduce
testing ground
demand
for
for
new
silver,
trends.
causing prices
Early
to fall
reactions
even after
provide
a strong
valuable valuable
rally.
insights into
And
how
in
the
addition,
broader market might
liquidity
behave.
conditions can play a
This
significant role
interconnected
in shaping
system
price
highlights the
movements,
importance
as
of
periods of
staying
low liquidity
informed
can
about
exaggerate
global
volatility
developments,
and make
as
it more
focusing only
difficult
on
for
local
traders to
activity
execute
can lead
orders
to
at
missed
desired
opportunities
levels,
or
increasing the
unexpected
potential
risks,
for slippage.
especially in a
It is
market as
essential for
sensitive and
traders and
globally
investors
integrated
to
as
approach
silver,
the possibility
where
of a
price
large
movements
price
are
move with
influenced
caution.
by factors
Using
spanning
strategies
multiple
such as
continents
position
and time
sizing,
zones.
diversification, and
Ultimately,
stop-loss orders
Asian
to limit
markets move
potential
silver
losses,
prices
while
overnight
also maintaining
due
a
to
clear
continuous
understanding of the
trading,
factors driving the
strong
market and
regional
avoiding
demand,
the temptation
influential
to chase
financial
rapid gains
centers,
without a
currency
well-defined plan.
dynamics,
And
geopolitical
ultimately,
events,
the question of whether
institutional
silver
activity,
could
and
really
human
jump
psychology,
12% is
all
not a simple
interacting
yes or
within a
no, but
complex
rather a
and
matter of conditions
ever-changing
and
global
probabilities,
system
as such a
that never
move is certainly
truly
possible
sleeps.
given the right combination
Understanding this
of macroeconomic,
dynamic is
geopolitical,
essential for
and
navigating the market
market-specific
effectively.
factors. But it is
Managing
not
risk
something that
and
can be
recognizing
predicted
that
with
what appears to
certainty
be an
or
overnight
relied
move
upon
is
as a
actually
consistent
part of a
pattern.
much
And
larger
therefore,
and ongoing
traders should
process of
focus on
global
developing
price
a disciplined
discovery
approach that
that reflects
balances
the
the
collective
potential for
actions and
significant gains with
expectations
the
of
equally important
participants
needs
around
of
the world.
individuals.